Algorand's price has been disappointing recently, but there's much more to the story than that. So hey everyone, welcome back to Upside Down Data. In this video, I want to give essentially the state of Algorand, or at least a slice of the state of Algorand, talking about factors that have contributed to this very disappointing, frankly, price action that we've seen with Algorand going back and retesting its all-time lows, why this might be happening, and then what the outlook for Algorand might be going forward. So I want to touch on the tokenomics for Algorand. I also want to talk a bit about the technology and adoption as things that will all kind of feed into understanding the current outlook. Now to start, I want to be very clear that I want to give an objective overview of this. I'm not taking sides. I'm not going to tell you what to think. I just want to present the factors that I think are important to consider with Algorand and frankly any alternative layer one that one might be interested in, and I'll let you make any determinations for yourself of what those might mean. So let's go ahead and start off by talking about tokenomics. And so what I want to focus on is understanding potentially one of the reasons why Algorand has fared so poorly in this bear market. You know, Algorand has not been doing too well, especially when you just compare how we're now trading at levels that we only ever saw back at the very all-time low before we had the last bull market, you know, all the way back in March 2020, we're back down to those levels. And then when you think about a lot of other alt L1s, they're down a lot, but most of them are above their all-time lows. So why is Algorand all the way down here where some of the other ones maybe haven't been? And really what's important to understand here is supply dynamics. So what I'm showing you now is the market cap for Algorand. So this is not the price, it's the market cap. And one of the things that you're going to notice immediately when you look at this chart is, wait a minute, we're nowhere close to the all-time lows in terms of market cap. We're trading up at around 900 million, just over that. If we look back there at March 2020, we were down at 80 million, way lower than we are right now. If we just do a measurement from there up to here, we're 1,000% higher in terms of market cap than we were back there, but yet price is at the exact same level. What the heck is going on? Why is there this discrepancy? Well, the importance here is supply. So remember, market cap is calculated by multiplying the price of ALGO by the circulating supply. How many ALGO are there in circulation? And what's happened is that there's been a massive explosion in ALGO circulating supply. So that's what this is here. Essentially, the way I've calculated this is that you just take the market cap for ALGO divided by the price. Very simple math will tell you that that should then give you the circulating supply. You're just manipulating that formula to have circulating supply be what you're calculating. And what you'll notice here is that there was a massive, massive increase in the amount of ALGO that are circulating. If we just go back here to March of 2020, if we just do a measurement of back over here in March of 2020, up to where we are right now, you'll see that we increased about 1,000% in terms of our circulating supply. And that's important because price is determined in the most simplest form in terms of supply versus demand. How much supply is out there looking to be sold and how much demand is there looking to buy that supply. And so if you have massively greater supply, you'll need a lot more demand to get the price back to the same level. And so that's where we're seeing this really big discrepancy right now, where, you know, we're at the same price that we were back here in March, but market cap is significantly higher than we were in March, and that's because we've changed circulating supply. And so the positive outlook for this is that Algorand is actually more valued as a network now than it was back here, which is not the conclusion that you'd come to just looking at the price. If you look at price, you'd say people are valuing ALGO at the exact same level they did back in March 2020. It's actually not true. They're valuing it significantly greater. Basically, the market absorbed that massive amount of supply and ended up then having a market cap that's quite a bit higher than it was back here. If Algorand was truly being valued at the same place it was back in March of 2020, market cap should be all the way back down here as well. It's not. But the downside, of course, is that for the investor, where you're really caring about price, you know, is price higher than when I bought it or not, this sense of the network being valued at a higher level doesn't matter to you. It's what is price doing? And if price is all the way back down here, that's what you're feeling, that's what you're experiencing. And the reason, or a big contributor to that, in my opinion, is because we've seen this massive increase of supply. And though there has seemingly been an increase in demand relative to back here, it's not enough to keep price elevated, to really absorb all of that supply that we've seen hit the market. And this is something that's a little bit unique relative to some of the other L1s, is that all L1s experience inflation. With Algorand, it's been especially extreme. There's this accelerated vesting where when the price of algo was really high, they accelerated how quickly they were going to vest tokens out to early backers, early investors. And that was one of the reasons you see this massive increase back here in September of 2021. And then things have been increasing, and then concerningly increasing even more just in the last month or so. Now, the good news is that we're getting closer and closer to the maximum supply. So we're currently at 78% of the maximum supply, according here to CoinMarketCap, which means that the majority of the pain is over. That the majority of the inflation we were going to see for algo has already happened. But the issue with algo is that the rate of this inflation has been pretty extreme, especially when you just compare it to some other chains. And that's one of the reasons most likely why the price of algo has not fared very well, at least when you compare it to some other alt layer 1 blockchains there, because the amount of new algo that got released in such a short period was so extreme that when demand really receded as the bull market left and the bear market hit, then there was just so much more algo out there to be sold, and we saw a really big drawdown. Now, obviously, this is not totally unique to Algorand. All Alt1s got hit hard. Their price got hit hard in the bear market. But I think the reason why we're seeing Algorand trading at basically its all-time lows from the previous cycle is because there's such an extremely high amount of new algo that are out there. So that's the first factor that I think is just really important to understand. Now, I know that some people are going to be upset that I'm talking about this. They're not going to like this, but something that we talked about a lot when I was getting my PhD in that training was the data are the data. When you think about things from a more academic perspective, the idea is, should I go with my emotion or what I want to be true, or should I just look at what the data are and accept them as they are? And this is just, unfortunately for algo, the state of affairs. This is just the way it is, that algo, based on the way it was set up and the way that the tokenomics were set up, that this massive inflation happened, and now we're dealing with the fallout. And that just, unfortunately, is what it is. But as I mentioned, the good news is that's already happened now, and just by definition, that can't happen again. We can't see that much more algo hit the market in that short amount of time, because literally it just doesn't exist to be released. We're getting closer to the max supply. It just can't physically happen again. But there are other factors that impact how likely increases in supply are to actually impact price. And one of the things that can matter is how much friction is there between holding the asset and then going and selling it. And the idea here is, are there enough reasons that people would just want to keep on holding it, or is it really easy for people to just make that decision that they just want to sell and get out of the asset? And one of the things I've talked about before that can add friction between holding and selling an asset is staking, especially on proof of stake networks. You have to make the decision, is it worth giving up the yield I'm earning right now to go and sell it? And that's one more barrier that's in the way. And of course, with some protocols, there's a lockup period where you literally can't sell it until X number of times after you've chosen to unstake it. Oftentimes it's a month, sometimes longer, sometimes shorter. And then what also can matter is then what percentage of the amount of supply is out there is actively being staked at any given point in time. If the vast majority of the assets of the tokens are being staked, then that means for the majority of holders, there's a lot of friction, or there's more friction between that choice of selling and holding. It's kind of harder to make that shift. Whereas if there's a really low percentage of the asset being staked, then you can kind of imagine that for most people, that decision is a lot easier. There's not that staking reward there holding them back, and they might just be much more likely to just go and sell. Now, one of the unfortunate things with algo as it currently stands is that the staking ratio is not particularly high. We see it's only at about 28% of the total algo that's out there that's actively being staked. Now, one of the reasons this is probably happening is that algo changed their staking model. So it used to be the case in algo that they kind of had a passive staking model where literally just holding algo would just passively be staked and you would just start earning rewards. But then they changed that system to be where you had to participate in governance to earn staking rewards. And one of the things that's been a part of this is that, one of the things that does add some friction is that you have to lock up, you kind of have to commit to a 3-month period to earn rewards as it currently stands. But it's also a more active system that not only do you have to, commit to locking up your algo for that period, then you also have to make sure to vote in governance proposals, or else you're not eligible to actually earn rewards. And so it's something where it requires a lot of effort, especially relative to some other staking systems, to actually participate in algo staking. And so that's probably part of the reason why you see this relatively low number, where a lot of people, for better or worse, just frankly can't be bothered. They don't want to go and make sure that they're getting in there and voting and doing everything and then committing to each period. A lot of people just don't want to deal with that, and they rather just hold and just lose out on those staking rewards rather than putting in that work. Now, obviously, one could argue that it's not that much work. So what are people doing? The reality is that people are lazy. For better or worse, people are lazy, and especially if there are alternative places they can put things where they don't have to do that, they might just go there and do that as well. And so I think that's one of the potential kind of consequences of that new staking model, is that's led to fewer people actually staking. Now, I'm not going to make any judgment about what is a better staking model. I think, obviously governance is an important thing. And a problem that a lot of layer 1 blockchains have is that people just don't vote in governance proposals, or very few people do. So I think one of the reasons that this was implemented was to try to encourage participation in governance. I'll leave it up to you to decide what's better. But I do think that one of the consequences most likely has been this lower ratio of staking, especially as compared to some other blockchains that have considerably higher percentage that are currently staked. Okay, so that's talking about tokenomics and things that can add to friction in terms of selling that can impact price. Now I want to flip over to talk more about the demand side. And one of the things I want to talk about there to start off is technology, because you can imagine that projects with stronger technology might attract more interest. And of course, with Algorand, I think most people would agree that it has strong technology. I think that's what most people who are bullish on it, the reason they got into it was because they liked what it was doing in that space and see it as having a lot of advantages over some of its competitors. And even recently, Algorand just cut its block time even more, made itself even more fast and scalable in that sense. And so continued development is happening to take something that was already strong and ideally make it stronger. And another advantage then that Algorand has is that its fees are extremely, extremely low, especially in the context where you have Ethereum, which during the bull market was prohibitively expensive to transact on just because the fees were so expensive. Algorand really stands out in the fact that it's so cheap. It's 0.001 algo for the cheapest kind of transaction, which, is fractions of a penny, is absolutely basically nothing to go in and transact on the Algo blockchain, the Algorand blockchain. So that's an advantage. Now, one of the other things that's also, I think, notable from a technology perspective is that Algorand, at least natively, kind of at its root, at its base, does not use the Ethereum virtual machine. It has its own virtual machine, the Algorand virtual machine, which uses a different language for writing its smart contracts. The EVM, Ethereum virtual machine, which is used by Ethereum and also some other alternative L1s, just adopted that virtual machine as well. That uses Solidity, that's the language. This uses TEAL, this transaction execution approval language. And this has different consequences. So one of the advantages of having your own virtual machine is that oftentimes it can lead to better scalability. You're not trying to shoehorn someone else's virtual machine into your own blockchain, and so you can oftentimes create things that are faster. Solana famously uses its own method for creating smart contracts, and that's one of the reasons likely that it can be so scalable, so incredibly fast. And one of the other advantages is that anyone who starts developing and starts working on smart contracts using your specific not EVM, just virtual machine, are less likely to just leave because they'd have to reprogram the whole thing in a different language to go somewhere else. Whereas with those other chains that chose to use the Ethereum virtual machine, a risk they run is that anyone who goes and builds on them could just jump ship to another chain that also uses the Ethereum virtual machine just for whatever reason. If there happens to be incentives over there or whatever, they could just very easily go over to that other place. So you're more likely to keep development in place. But of course, the consequence, the kind of the negative side, is that people might just not want to bother learning a new virtual machine if they've already been learning Solidity. They just want to stay in that ecosystem, and there's plenty of options to just stay there and do that on chains that are more scalable than Ethereum. So they might not make that change. So I'll leave it up to you to decide, if it's a good thing or a bad thing. There are also different protocols that integrate with the Algorand blockchain that do have EVM compatibility. So it's not like EVM can't be in a part of the Algorand ecosystem, but just natively kind of at a space level, it's using the Algorand virtual machine, which does distinguish it from some of those other ones that use the Ethereum virtual machine. So then also Algorand, it does have an ecosystem. So we're going to then switch over to actual adoption. So that's the technology that people could build on it and start using it. Now we can ask the question, what have people actually been doing already? What is the kind of broader ecosystem? What has been going on? So Algorand certainly has had development on it. It's had DeFi development, a number of different protocols. It's had, NFTs, a number of different things, gaming. Certainly things have been happening, but it's not at the same level that we've seen with other L1s. And in some ways, this was somewhat of a choice. Algorand did not go out there trying to really capture the more, retail DeFi market. Certainly some of that has happened, but it was not their main initial focus. And there have been some newer things that have happened. So there have been some different investment firms that have agreed to, putting in money to help try to build out the ecosystem further. Algorand's also trying to branch out into India. So India obviously being the most populous country right now, it currently is not the most favorable to crypto, at least from a governmental perspective. But the idea would be that if Algorand could get their foot in the door and that changes, that could be beneficial. But of course, the issue there is that that's all very speculative in the future. And I personally wouldn't expect the market to really give too much credit to that until something more definitive might happen. So that's something that's more of a long-term possibility, not something I would expect to change price action in any short-term context. Now, Algorand also does have a number of partners. There's a decent list here. But you also note that it's not massive, and it also doesn't have some of the really big names, tech names of the things that you might have see for some other projects. Not to say that they can't get that, they can't partner with some of those, just currently that's not really the state of it. And so I think when you look at Algorand from kind of an adoption perspective, I think what they really have been trying to do is reach out to more enterprises, some of those bigger groups, but that hasn't translated into actual hard usage of the network quite yet. You can see just here on Algo Explorer, just looking at the chain, the current transaction per second is just above 5, not particularly massive. So even though Algorand has the capability of doing thousands of transactions per second, we're just not seeing the level of demand that would actually get it anywhere close to that level. Now, again, I know people aren't going to be happy to hear this, but again, the data are the data. I didn't make this happen. I'm just saying this is what it is. You can go look at it for yourself. It is just the state of affairs. And so kind of I think a fair assessment of it, I think a relatively objective assessment of it is that Algorand has plans, it has things that it wants to do, and my understanding is a lot of what it has been trying to set itself up as is to be something that's more geared towards enterprises. One of the things that they tout often is their sustainability, how it's a carbon neutral blockchain, trying to appeal to a lot of those larger enterprises where that matters. ESG matters still in the business world. But one of the trade-offs that anyone's going to make trying to target that kind of audience is that companies tend to be slow to change. Unless there's something that forces them to change, there's some new technology, they're going to be slow to just adopt that unless there's something that really forces them to do that. And so I think another reason that we might look at Algorand and think about why it didn't explode maybe quite as much to the upside in the last bull market as some of the other chains did is that it was just targeting a different audience. It wasn't going after that retail DeFi group, which was something that probably made people a little bit less excited than some of the other ones, like Solana, for example, or maybe Avalanche, which went more parabolic in that phase than Algorand did. But that wasn't really the main focus. And so I think with Algorand, what you might think of then is that the assessment is, can they actually capture some of that enterprise usage? And you might just expect that that's going to take longer to do, and that's fine. But I also think that then that thesis you have to be evaluating and see, are they actually succeeding in doing that or not going forward? So obviously that's up to you to assess, but that's, I think, one of the things that it is. And frankly, that's probably also part of the reason why Algorand never got as high in the DeFi world in terms of its total value locked relative to some of the other platforms, like, for example, Avalanche, that they didn't do, or at least not as early on, the kind of massive incentivization of development of that space as some of those other chains that kind of got a first mover advantage. And Algorand's total value locked has been, on the decline really ever since the bull market back then. And again, I think this was just a trade-off that was made, that you can't focus on everything. Algorand chose not to make its main priority being in building out its DeFi ecosystem. It was more of these other things. And so that's where I'd expect kind of going forward. I personally wouldn't expect Algorand to make its mark by just suddenly exploding in the DeFi space. It could, but I think really what would elevate it and differentiate it from some of those other L1 chains that are out there that really haven't tried to do anything with specifically targeting institutions or enterprise use cases is if Algorand could start actually capturing that. And so to give a kind of wrap up then of what's going on with Algorand, I think when we look across a lot of this, the picture kind of starts to make sense of understanding, historically what happened in this bear market and why Algorand got slammed so hard. It had a massive explosion in supply at a point where demand for the network just wasn't there to absorb it. That certainly Algorand's technology is great. There's not really a lot there to be too concerned about. And I think, if Algorand had been the first L1 instead of Ethereum, it probably would have done extremely well, based on its technology alone. But the issue there is it wasn't. And so obviously anything after that needs to claw market share away from not just Ethereum, but all the competitors. And we haven't seen that show up in a major way yet. And certainly there's some things that promise the possibility of some new growth, both with targeting new markets and with, continued building out of its ecosystem. But for that to translate into enough demand to really offset some of this increase in supply, that's probably going to take time and frankly probably going to take until the next bull market for some of that fruit to come out. But I think it's also important just to remember that whenever that next bull market might come, we're in a situation where there's way more algo that's out in circulation than there was back here. And so for algo to get back up to these prices, you're going to need a surge in demand that's even greater to be able to kind of offset that increase in supply to be able to bring us back up there. And that's just, again, the data are the data. I'm just reporting it as it is. That's just the way it is. That it's going to require significantly more demand to get us back up to that same price as we were before. Because basically the idea is that to get back up to $2, Algorand's market cap is going to actually need to be higher than it was last time it got there, because the circulating supply is now higher. So that's something that's just important to keep in mind with these projects. But again, the idea then is that going forward, that tokenomic debacle is behind us. And so I think really what's important now to anyone's thesis about Algorand is, what do you think is going to happen with some of these other dimensions that we've mentioned? I think most people think that technology, that's probably going to be relatively stable. There's probably not really too much concern there, at least in my personal opinion, not financial advice. None of this is financial advice. You should be making your own opinions about all of this. But in my personal opinion, then it comes into what's going to happen then next with demand. Is it going to get enough adoption or just enough new speculative demand to really rocket price of algo up further? And if you think it will, then great. If you think it won't, then that might be concerning. And so obviously I leave that up to you to make your own determination of where you think things might go further. But in my opinion, these are some of the dynamics to keep in mind. And really, when I just kind of look across these, it makes total sense why Algorand got hit so hard as it did. But we're now in a situation where that particular shock is impossible now. So going forward, the dimensions to watch are probably a bit different on things like adoption. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about our different models and indicators and thoughts over there.